Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Monday, May 15th, 2023. It's now the 13th. We start off in the S&P 500 daily chart in DeMark looking back to end of December 2021. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential buy setup 2 count. And to indicate that for end of day on the 15th, there must be a close above 4119.17 for the price flip to the sell setup count 1. And if price can stay above it for open on Monday, then we'll have the price flip to start the day, but we have to give it to the end of the day to see what happens around that level's close right here. The S&P 500 daily chart could qualify this 50% propulsion momentum up with a close above that level end of day Monday, and a quick ongoing supply line and demand line were printed from this bar's high here being higher than this bar's low, so I used 2 points, and there were 2 points here above this low and 2 points here above this low. And this demand line was qualified by about 20 cents to the downside. So if there's upside and we get a close above that level where that demand line is and was qualified, then that could become qualified canceled, has to close above that level. And same thing with this ongoing supply line, but in reverse about the points. And price would need to open above that level and close above that level to get that qualified. If it opens below that level and subsequently closes above that level, it will be disqualified. Blast to the upside and get above these ongoing supply lines, they will be qualified with closes above their levels. Same thing with this ongoing demand line, which starts the day Monday at 4082.56. And there's still very good support underneath that ongoing demand line with the trend factor disqualified down 1, the lower Stark band, and the channel 3 low. And here's a view zoomed out a bit. The S&P 500 weekly chart looking back to the COVID crash era. I'll zoom into the current area now. The S&P 500 weekly chart experienced the price flip to the combo and sequential buy setup 1 count, and that took away the sell setup 8 count. And price could not heave itself over the momentum up levels so that those could be qualified. So those are 2 major disappointments there. However, I still did not seek protection in the form of shorting indexes and the likes of that. And I think I'll just take my lumps down to the 4000 area first and then see what happens there. It looks like price is destined to go down here, and that could happen sooner rather than later and will be quite painful. However, one just could not take the chance, and really there's no signals to sell short, so price could move up as traders and investors push it up a bit, but there's a lot of forces working against price here. So around that 4000 area, there's the channel 3 low, the conversion line, which is still above the baseline, which is in the area still, so pretty good support. Then there's the Bollinger Band mid-band, which is a 39 period simple moving average. And the S&P weekly chart has another chance to heave itself over the momentum up levels for end of week, end of day Friday coming up. And that would qualify those levels with closes above it. The S&P 500 daily cloud chart looking 26 bars forward over here and 26 bars backwards up to the lagging span line, and the conversion line 26 bars back should be very good support starting for Monday here if it can hold on a couple of days, and that would bring the conversion line up here to about 4083 and then 4100, somewhere in that zone. And if the lagging line hits that, and then price over here moving forward to wherever it is the current day, should have pretty good support at the conversion line and the baseline. So barring any big moves for the next few days, Monday, Tuesday, and Wednesday, by Thursday there should be very good support. If it does blast through the conversion line right away, then there's the top of the cloud here, and get through the top of the cloud, and there should be pretty good support at the bottom of the cloud and the baseline 26 bars back. You can see the baseline starts taking a turn to the upside here and just keeps going. So that will eventually be good support for over here if the lagging line can just hang on for a week or two. The NYA top caller chart, we'll start off with the NYA to SPX ratio, basically value versus growth. To see that last time that we looked at this, there was a growth spurt below this purple dashed line here. So a lot were pouring into the big fat cap balance sheet extraordinaire megatex. And on Friday, it looks like everything went sideways a little bit, so not much happening at the end of the week. It did have a bump up near the end of the day, though, for price across the board. And the NYAD did bump down a bit. It's still below its 50 EMA in green. And the ratio adjusted New York McClellan breath oscillator is still pretty well below zero at negative 30.01. And for NYA price, there were some huge swings on these past four candles here that are red. I'll zoom in a little bit so we can look at that. And you can see the wicks on these past four bars were huge. This one had a wick down. This one had a up and down indecision spinning top candle here with that small red body and two huge wicks above and below. And then this huge red bodied candle had a huge wick under it. And then Friday had another indecision candle here with a small body in the middle and two huge wicks above and below. And there were others that had huge wicks and bodies. Look at that huge white candle. So there's some real chaos here. And it looks like we're in a rolling recession. That's what this has the indications of, where it gives you hope once in a while, and then during the intradays it has wild swings, but eventually overall it starts heading down. So I expect that to continue. And the ratio adjusted McClellan volume oscillator is well below 0 too, negative 37.78. And the ratio adjusted summation index of the ratio adjusted McClellan breath oscillator is below 0, negative 29.14. Not good to see. Same thing with volume over here, negative 53.41. RSI 14 could not make it above the 50 equilibrium line, and the 21 EMA signal line is still right above it at 49.61 as resistance, along with the 50 line. And the on balance volume took a dive down. It's headed for that uptrend line in dashed red here. Let's hope it hits that and bounces up. And the New York stocks only AD line is still in a downward trajectory, along with the advanced decline volume for the stocks only. It's a 19 and 39 EMA, blue and red respectively. Looks like they both hit zero up here, couldn't get above it and started heading down. That's not a very good sign there either. And the intermediate term volume oscillator for the NYA is below zero. Its signal line, a 10 simple moving average in blue, is below zero. Same thing with the intermediate term breadth oscillator and signal line, both below zero and pretty much headed straight down. However, the instruments above their 200-day simple moving average in the NYA has managed to stay within the 40 and 50 zone. So not too much movement there, up or down, right in the middle of it. So that's okay, but this is really ugly up here, these oscillators above it. Let's keep tabs on the NASDAQ 100 NDXHILO chart. We can see that the 5 EMA in blue is above the red 10 EMA, and both are above the 21 EMA in gold. And NDX price, the NASDAQ 100, ticked down Friday. You can see that here after a pretty nice bump up, and the NDXHILO index itself had a nice bump up here, so we all know that that's a lagging indicator. And the ROC 12 is headed back up. It's almost at zero, negative 0.96. So as it stands right now, that's within my criteria of plus or minus 5 from zero, but the blue EMA 5 needs to turn around and head back under the red 10 EMA and coincide with the ROC 12 plus or minus 5 from zero. And the long-term KST on the bottom here really had a turn down for Friday and Thursday, probably the last couple of days. It's matching the intermediate term KST. They're both still above zero, but the intermediate term is below its signal line, and the long term is fast approaching its signal line. And the short term KST definitely pulled back on the stick and headed straight up. It's above its signal line, which happened below zero, and now the KST is above zero. So in the short term, I see advances for the big fat cap balance sheet extraordinaire megatechs, but in the long term there could be some downside, especially if the intermediate term KST in the middle can get below zero, and that would be an indication of that for downside. And if that happens, I expect the blue to be hooking around and getting under the red 10 EMA here. The Commodity Research Bureau's CRB index shows it in a primary bear market, 23.2% off of this peak here, and it's all within the context of a secular bull market. So I have this marked down here as sort of a floor, and you can see a trend line here that it's been bouncing off of a couple times. had some little dips below it, but somehow managed to head up above it. But if it breaks down through there, we're going to watch this measurement here for the 23.2% off of the peak. And to reiterate, primary bear markets within the context of secular bull markets are normally not that bad, and the extent to the downside is minimal. So this is the indication of a bear market, anything negative 20 and below, so we're right there. And I think it's in a unique spot where if inflation rears its ugly head again and heads up, that oil and commodities will surge in price. And then conversely, if the economy opens up and things get better and people start moving around even more than they are already, that means oil and commodities are going to be in more demand and the price will go up. So either way, I think eventually it's headed back up. And gold historically leads the way for commodities first. So you can see here by the gold shares against the DB Commodity Index Tracking Fund that gold is definitely leading the way in the commodity basket. And you can see gold broke out of this rising peaks resistance line that has now become support over here, broke out right here and is headed up. And I've put a floor under this ratio here, and above this indicator down here, these two are for gold. So this is the gold MACD and the gold PPO. And the federal government, Biden administration, will be refilling the Strategic Petroleum Reserve starting in June or the end of June, I'm not sure. And hopefully they've bought contracts a long time ago for this time when oil is low. I haven't heard anything about that. All you can do is hope that they've done that and got us the best price on oil. He said he would, so this is a good time to do it if they bought the contracts for around this period here. And we are able to look at the futures contracts for WTI crude over here in investing.com. I'll scroll down a bit. So yeah, this is good. So they have plenty of choices to buy contracts in the future to fill the SPR. Look at that, they're all $60 all the way down, even less in January. Looks like that's going out to 2029. So for the current year, so that's not bad. October, December down to 68, January 24. So yeah, it's getting into the 60s where he said he would like to refill the SPR, so hopefully they're paying attention to this. The S&P 500 support and resistance levels big board chart shows the gray areas at the daily baseline, the 20 simple moving average, 21 EMA, and the pivot point, along with the weekly diamond extension bottom perfect uptrend channel line. And the S&P 500 closed the aftermarket hours on Friday at 41.19. So to the immediate downside is the daily conversion line and S1. Leave the 4100 zone, then it's down into the 4000 zone, and that ongoing demand line is right there along with S2 and the 50 EMA. And to the upside is just about everything else in the 4100 zone. R1 R2 uptrend line from 06/16/2022, both daily ongoing supply lines here, and the daily Bollinger Band upper band. The S&P 500 daily AD line stayed under its 21 EMA signal line. However, the daily NASDAQ 100 AD line still remains above its 21 EMA signal line. And the ROC 1, this is the 5th time I've seen this, is going sideways at negative 0.16, so just about right at zero and pointed sideways. And every time I've seen that, it has had an up move the next trading day. So there are a lot of forces working against the S&P 500 price, but this is one peg to hang your hat on if you think there's more upside possible. And the ATR2 is still within its green low volatility zone at 40.37. And the PPO Extreme bumped down a little bit, 2.37% above zero. And the New York traditional McClellan breadth oscillator to get back to zero would require 1,515 advancers over decliners to get back to zero. And I made a mistake in the previous video and put the wrong number in there. So the traditional McClellan breadth oscillator for the New York composite is well below zero still. And all the PEs bumped up a little. The S&P 500 12-month forward PE and the S&P 500 trailing 12-month PE, you can see there. So these are still slightly above historical levels for that PE ratio for the S&P 500. And right in the middle of the big board, I've boxed in those cloud levels, the ones for the lagging line, and top and bottom of the cloud for present day, top and bottom of the cloud 26 bars back. Have a great day.